think, act, and prosper. You are now tuned into the Money Level Show.
Sure. So, how important would you say liquidity is during these times? I mean, obviously, we're seeing this month. I'm expecting some bearish sentiment to really come in and take over at some point. And I'm looking at factors like, okay, the Fed just started quantitative tightening. We got inflation numbers coming out, and gas prices have actually went up. Oil and gas have went up. So we'll see how that impacts the inflation numbers. You also have the FOMC meeting, and the Fed's talking about raising rates by 50 basis points this month and another 50 basis points next month. Biden met with Jerome Powell, and they're like really focused on fighting inflation. So I'm expecting a lot more hawkishness this month that may translate into the markets. I know it's for sure going to translate into the growth sector for sure. And so I'm wondering if the commodity markets will be impacted because, like, I'm seeing oil's actually holding up really good. Like, my portfolio is not really down that much because I held commodities or whatnot, and oil is actually going up and staying pretty stable. And so, what's your take on the sentiment that may be happening this month with all those different factors, and then how important is liquidity?
Liquidity is obviously important, most important when it comes time to take money off the table. So if you're trying to trade in and out of these markets, I would say it's very important. It also, it depends. It's a individual thing as well. Big funds need the most liquidity. If your position sizing is smaller, the amount of money that you have invested, you need less liquidity, but still clearly it's important. I think that's why some of these smaller names in the resource space move so drastically to the upside and the downside is the liquidity is minimal. As far as predicting, the short term, it's really, really difficult. I'm with you. I don't think we're out of the woods. I don't think the broad markets have printed a bottom here. I think that we're going to see increasing in recessionary numbers. I do think inflation is likely peaked or is close to peaking. I think that there's a number of elements across multiple sectors that are showing that inflation is likely peaked. But like you mentioned, oil prices have gone up since the last numbers came out. So maybe we'll have a flat-ish CPI print. Maybe it'll be slightly down, but I think, I don't think the inflation is going to stay this high for that much longer, especially if they continue to hike, and we do see a more significant recession. We should see those inflation numbers come down pretty quickly, which would give the Fed an excuse to pull back. I don't think their intention is to fully crash the markets. Most people, especially those that are much smarter than I am, basically think the Fed's going to hike until they break something and then they're going to pull back. So how soon that happens that's the bet that everybody's trying to make. And I'm just not really in that game. I'm trying to think about the end of the decade. Do I think we see some more downside in uranium? That's really tough. Yes, probably. When that happens, I don't know. And the only reason I say that is because I'm not seeing volume come in yet. But like I said, Sput's sitting on $93 million of cash that can buy 1 million pounds of uranium, plus at this stage, 1.5 million. And so, the spot price likely has bottomed. And so when will we see real volume come in? That's the question. It seems to me like that will happen when risk, generally speaking, is back on. And that seems to be the case across most markets. So my gun to my head, I think we'll see more downside in the broad markets, but I don't think we're going to see crazy downside and a huge crash and a deep depression. I think this is probably one of those things where there seems to be a lot of pent up demand, a lot of pent up energy. And so I think it's just a matter of the Fed doing what they need to do to bring inflation down to a level that they can live with whether that's 4, 5, 6%. I don't know what it is. Maybe they just need to see, okay, what we're doing is working. Now we can pull back a little bit. At that point, like I said, 25 trillion is wiped out in 6 months, 5 months. So a lot of damage has already been done. We've got a midterm election year. I think that matters. I think that they're already facing a complete wipeout in the midterms, but I think crashing the markets is not going to help them. So they're trying to ride this knife edge between inflation and the health of the markets.
They said they want a soft landing, right?
Yeah, and I don't know how they pull that off. I mean, the only thing they can do to soften things, I think, is stick with what the market is. I think the market's pricing in another 250 basis point hikes, maybe 25 after that. So if they stick with that plan and it works and it brings inflation down, then possibly we see a little bit more downside the markets, and then they pivot, and then it's game on.